Right, I'm going to try and make this a fairly quick one. I don't have much time, but caught a sick long today. This is on a demo account again. About really sick execution. Unfortunately, on my personal, I did catch it, but I didn't hold on to it. So this is gold. I also caught it on silver, which is this window. If I turn on executions, can show them real quick. Silver was the one I was the most interested in, and this is partly why I want to make the video. It's because I'm not sure. Was I wrong thinking that silver had the relative strength? Because if we compare the two, if we jump over, sorry, this is really messy at the moment, I know. I tend to screenshot all the stuff as I go and do drawings and screenshot the drawings and take notes, but don't need that. Don't need that. I'll leave that for now. But so if we go to the 1 hour time frame, then we can see where we are at. So initially I was thinking that we had strength in silver as opposed to gold, and that's partly because of how heavy gold was on the sell-off going into the close. Sorry, no, into Monday and the Sunday open. Failed to make a new high, sold off, whereas silver made a new high and didn't sell off as much. So I saw this down here is okay, silver's way stronger. I was actually kind of basing trades off of that, and I was only longing silver, only shorting gold. But that appears to have shifted a bit because you can see that gold is clearly moving quite upwards and then silver's lagging behind, but I still think silver can have the nicer squeeze. Gold is hitting a whole bunch of highs already. Silver, however, is only just pushing above this high, and the next stop for silver would be all the way up here, unless it stops in the middle at 94.5. So there is still a lot of potential on silver. Maybe it plays like a catch up with gold. But I was getting long in this area, and I was also long through the PM session. So I was trying to buy in this area, got stopped out right there, got back in up in this area, and added through here, and then rode this up into the close. If I jump over to sorry, this was on my. Got too many. I've been trading a lot of different accounts. I've got my personal running, got the challenge account, and I've got a demo account all running at the same time. So it's definitely taking a bit of my cognitive demands. These are the executions for the PM session. So buying a bit early. So I was a bit early into this trade. I decided to close it out before it took out the low again because I can't just have an infinite stop. And it does look, I am definitely a bit early. Walk away from the computer, come back, and it's done exactly what I wanted to see. It's like, oh, it's looking really strong. Got long with a stop down in this area. Came really close to the stop. Started showing bullishness. I then moved my stop below this low. And it moved really nicely. And I was thinking, okay, minimum target should be this short-term impulse high. Comes really close, and then I close it before the close of the trading day. 1800 sells off. I recognized that we had just broken an intermediate term high. That indicators that we had had a shift and that ERL should not be taken out. So I trusted buying down here with a stop loss below that low. Took a partial because we were rejecting from EQ at the range, but resolved to add to my position if we got a what I call a strong closure above the EQ. It's a very specific signature with a very specific stop loss rule. I didn't end up needing to on this account because it was close to passing. Ended up passing it right there, so there's no point trying to add right in the middle because I'll just be putting myself into more risk for trying to pass it. But I added, once we got this, a very specific signature here as well, a manipulation closure on the 15-minute time frame. I'm assuming you can see my mouse. I hope you can. About 15 minutes closure down here, instantly reverses back up. It's a very specific, powerful signature. So I trusted running that up, and that's also where I entered on my personal. Once we got that signature, I trusted getting long it. This is actually on my swing account, so I shouldn't really be scalping on it. This is the account that I blew up last week multiple times. But this is a good start to recovering it, I guess. Well, not recovering it because you shouldn't talk about money like that, but Yeah, it's a good way to buff up the account to get towards those new equity highs. So manipulation closure, added the position, and this was a mistake. So what happened right here is I was looking for that strong closure above the EQ of the range. We got up to this area and I had my finger on the just hovering over the close button for no reason. It was just hovering there. And then the instant, if we look on the 15 seconds, you can probably see it. The very instant that made a tiniest little downwork. So that red candle right there, I see that red candle and it happened in like a blink of an eye and I just accidentally clicked just instantly without even, just as a natural reaction. So I closed out that half of the position. I did want to re-add, and initially I had my limit entry just down here, just below this closing candle's low. Then I figured, you know what, I could come down to 84.2. So I put my limit buy down at 84.2, also 5-minute candle low, and it didn't quite give it to me here, but I believe I got an entry on the demo. So on the demo, I got the same fills, but then I did add, I was a little bit more relaxed on that. I actually just used the midpoint of this wick. What I really liked about this situation, it's one, we're wiping out a whole bunch of sell side down here. If we compare this to gold as well, which has been very key in this situation, gold had that rip, sold off aggressively, but you'll see that gold made the higher high, but then also made the higher low. Whereas silver failing to take out the highs, but breaking this intermediate term high, indicating that it is in a bullish market structure, aggressively dropping down below all this internal range, making the SMT under the lows just after the open. So very enticing sell-off that tripped in sell side. That's the main point. When we pulled back, yes, we did reach EQ of the drop down. We didn't close above it yet, but we did reach it. We created a long wick. Now traders often see the wicks as a bearish rejection, or on the other side a bullish rejection. And when traders see this, there's a good chance that anyone chasing the short are going to want to move their stop loss to here. So that's partly why, also why when we came back down and rolled over, and got that reaction I was looking for, I trusted buying up here. I didn't just want to buy on the way down. I wanted to see it actually give me some sort of other confirmation. We got that. It also explains why after getting above this wick, we supported this area really nicely. When we finally did begin to displace higher, you'll see other signatures such as failing to trade into the midpoint of this wick, showing that strength, and taking a partial up here at the short-term low because gold had just run out the highs already, was about to. Gold gets this big pump. So big pump in gold, whereas silver not doing anything. Then gold pauses, whereas silver rallies and then has a pullback. And then we get this SMT. So silver making the lower low here, whereas gold failing to break that low. And from there, like I suppose you could kind of argue that silver is beginning to catch up, but at the same time, like if you look at the range, within this range, silver has got nowhere near EQ, whereas gold is a lot closer. In fact, it's already above it. And this is something I need to, one of my goals, I don't have time for it, it doesn't seem today, which is why I'm making this really rushed video. But I need to work out how to measure relative strength and weakness in a very objective manner. Because at the moment, I'm just going like, oh yeah, it's kind of, it looks pretty strong on silver because it didn't go that low, much below the low, and it's making new highs. And gold's probably a bit weaker then. But there must be a way to measure that. And obviously in percentage terms, it doesn't really work because if silver is up 25% and gold is only up 14%, then, that doesn't quite line up. And that's just because the range and prices are so different. But maybe if, like SMB Capital, their new podcast, I think it's called The Trading Floor, in a recent episode, they talked about how they measure relative strength. And one of the ways they do it is they use the percentage change, but then they normalize it using the average true range. And that's an interesting way to do it, and that could potentially work. Another thought I had was also just to use this range. So see how much of a percentage have we moved within this range. But I don't really know if that would work because the whole edge in using relative strength is identifying what does have the relative strength and then identifying when there is a crack in that correlation. And that crack would tell you that it would give you false information essentially. And then comparing the two different time frames. So from the high time frame, let's just say that gold has the relative strength in the high time frame. If gold is then selling off aggressively, whereas silver is holding up strong, then that can potentially indicate that there's a crack in the correlation, and then also making the high highs and high lows at specific times is also very essential. I wanted to add to this position. You'll see I actually got stopped out here. That's because I had my limits. My take profit was right at this high. So if I bring up this page a bit, that short-term high that we ran through before making the failure swing, that's where I wanted to have my TP. It just fell short of it on this demo accounts. And what I had done, I'd taken a partial here, and I trailed up 200 of the lots to just below this short-term low. And yeah, while it reached up towards my TP, it spiked low and took it out. And you'll see I've got it written out here, impulse origin or here. And that is basically where we're at right now and why I just missed this trade. That was a buy, a valid long, and the stop loss just needs to be below the impulsive down closing range that sent us through EQ. The only problem with this is that it's really, really close. So I didn't like how close this down closing candle that took out this low was to EQ. Usually I'd want it a little bit below. So that's why I've left my stop loss all the way down there. But why was I confident in this continuing the squeeze? Well, one, it's already showing you the signatures of a squeeze, which is things such as failing to break down below lows. So it makes it some lows, makes a false reversal, but then just has no follow through and then it squeezes higher. We then have the next main confluence. Move that out of the way. We don't need that actually, but within this range, but you see it better on the 5-minute time frame. Within this range, we have buy side above these highs, we have buy side above this high, and then we consolidated for a extended period of time below that obvious buy side pull. If we are going to take out this buy side pull, where's the next level of liquidity? Sure, there's bits of liquidity throughout this range, but there's going to be a very thin amount of liquidity throughout here, and then the next major area is above these highs. So what you want to see is you want to see when we hit this high, it gets speed towards that next pull, and this is just a typical kind of framework that you get in a squeeze type condition. We're already seeing that squeeze in the other on the low time frame, and then if we look over at the 15-minute chart on gold, don't need this green line. So on the 15-minute chart on gold, you can see the pre-Sunday open highs sitting up here, Sunday open, and the liquidity midpoint. I've talked about that in the last video as well. That's basically the midpoint between whatever pull we've just hit and the next one, which the equivalent here will be between those two pulls. And you can see that we've just closed above that as well. But a closure above that midpoint indicates we're very likely to reach to that next pull of liquidity. So how I use this is you'll notice at this point, so the exact same point in time on silver, if we just draw a big ass box right there, we were below that midpoint. So we didn't have any confirmation it was heading towards that high point. Whereas on gold, at that exact same moment, we closed above it right here. So on this candle right here, while price was down here on silver, we got the confirmation on gold that was going to continue towards this high, which means that we could trust buying the pullback. And how do you buy the pullback? Well, if it's a squeeze, EQ is very important. The accumulation will happen below EQ, and once you get above EQ, that indicates the squeeze is underway if we hold above EQ. And so we should not return back to the area that sent us above EQ, which is why I had written down here, impulse origin. This is what I saw as impulse origin, the move that began the run above EQ. The strong closure above EQ, all that is multiple candle closures above that midpoint of the range. And this higher time frame context where from the range low to the range high, there's a good 5 hours or so, 3 hours. Using the 15-minute makes a lot of sense. So a 15-minute candle that displaces above, and then another 15-minute candle that closes above without retesting the midpoint of that range. That means that you should be able to just buy the pullback. So very aggressive pullback. I wanted to see if it gave me a bit more structure down here or just something, because as I mentioned, I wasn't entirely sure if this was the impulse origin or if I could use this because this was so close to EQ. But let's say you just bought next to EQ and put your stop loss all the way down here. That's still a pretty good trade. But the other thing I could have done a bit better is I could have bought it on the way up, but I was feeling a bit mentally fatigued at this time. I'll jump over to this page again. Let's see. So I was feeling a bit mentally fatigued, and obviously it just pulled back really aggressively and reversed straight back up. I did want to get in here, and buying on the right side of the V works pretty good in a squeeze type environment, which, as I just described, I had all the different confluences to suggest that we were indeed in a squeeze, which means that once you see the right side of the V, it should continue to squeeze on that low time frame. So you should be able to trust that we won't be taking out lows, and those same principles that I just showed on the high time frame should still apply. How I could have used that here is one, drawing out a box from basically low to the high, finding the midpoint of that range, so that's just EQ. There's also between the swing highs, so that the first significant swing high, you could also use that, and you just find the midpoint. I just tend to draw it the same every time, but the midpoint from the swing high down to the low, I call that the SR mid, and the same principle of a strong closure above that, this time on the 1 minute time frame because it's a lot smaller of a time period, and then buying that. But the problem with that is that where's the impulse origin? I guess you could say all the way down here. But with how silver moves, I just didn't feel confident that it wouldn't just wick down there and run back up. And then once it was up here, I was mentally fatigued and it was just holding really tight and high, and now we've just pumped up. We are at a deep premium of the range. We're above that high of week. Good chance it just messes around and probably comes back into this range, maybe even revisits this area for another long. But yeah, so cool trade, but I wish I'd held a bit further, and I especially wish I didn't take profit right there. And the thing I need to study and really work on at the moment is how do I figure out what has the relative strength or relative weakness. Let's get rid of some of these drawings, which I don't need. Yeah, what has the strength, what has the weakness? We had this really nice price action here on silver and gold, and part of the reason I was really bullish over here is because, so I thought silver had the relative strength, and then silver has this deep pullback, whereas gold just didn't move lower at all. It just dropped lower and then just stopped. It didn't even reach this low, which is also a very key sign of a squeeze. Failure to break lows, that just tells you we're going to squeeze. But because of this, I wanted to buy silver, and so far, like, it looks like gold did outperform. The manipulation closure signature on the 15-minute time frame only appeared on silver, however, it didn't appear on gold. But once again, you can use those two assets together to confirm one another. So maybe you get the signature on one asset, but you don't get it on the other, which is another thing I could have potentially done here, maybe. Although, just because there aren't that many very clear swing points, like on the lower time frames, all these would be nice swing points. But I suppose if I was just being very strict with saying it has to be on the 1 minute time frame, well, that's a swing point as well. So you can measure out that to that high, but then it does respect it. So Yeah, I think maybe there just wasn't a setup there for me, unless I blindly bought the pullback, which I just didn't do, partly because on my personal accounts, like buying the pullback, let's say I bought here and had my stop down all the way down here because I wasn't entirely sure about this one. I'm not going to risk $60 on a micro lot with a massive stop. I'd rather wait for the right side of the V and then let's say buy as it's moving up, trusting that we won't go below a certain point. Um, yeah, just didn't materialize this time. And then as far as gold goes, I bought gold because I hadn't got that fill on silver, and so we got the exact same signature on gold. And I figured, why not buy gold? I bought it right at 420 was the idea, or 42, because price tends to bounce from those numbers constantly. Recognized a second stage of the market maker model as well. So we've got reversal, intermediate term low, first stage broken, puts in a high, takes out a low, and then as soon as we break that high, it becomes second stage. And I took that partial there because we'd hit this premium high just up here as well. And I would have re-entered. And how I would have re-entered was that's why I've got these lines drawn out using the impulse rejection failure second stage IRF framework, which is where you go back below, get a closure, take out a short-term low, and then get a closure back above that line. Then that becomes your entry, and that would have been really good because I was ready to load up on this one because that gives you a super tight stop. But we didn't get it here. It just worked below and then just continued to pump. Um, Need to get better at holding on to my trades when they. That's the quote. I remember I was listening to a podcast at work last night and I heard a quote from someone. He said, I build systems to keep me in trades. That's what I need to do. I need to build myself a system, which I've been trying to do a bit of, but build a system that keeps me in a trade until price tells me that, okay, it's time to get out. I guess that's kind of what the 2 minute trailing stop is. If you have a 2 minute trailing stop, you can just trail it all the way until you get stopped out. And if we look at the 2 minute time frame on this gold trade, you can identify would that have worked. So once second stage you played out, if we were using a 2 minute trailing stop, if we just draw a lovely template for a stop loss. Breaks out, okay, trailing the stop, trailing the stop, trailing the stop, trailing the stop, trailing, and would have trailed it all the way to here. So I wouldn't have got stopped out until this red candle right there, which is a pretty good run. Maybe every time we complete a second stage, then I should do that. Maybe every time we have a second stage, then that's when I implement the trailing stop. So we then look at silver and appear and look at what would have happened here on the 2 minute time frame if I used a trailing stop. Cool. So we break this candle's high right there, which means the stop loss goes at this low. We don't break this candle's high just yet, I don't think. Oh, we do just there actually, but that might just be on this broker. Let me see. This 8 cap down here. That's the only problem with having black bull markets as broker is that I prefer the 8 cap price feed. You can see that we didn't actually break that high on 8 cap, so I'll go with that. So we wouldn't have to get taken out here because we didn't break that high. Then only once we break that new extreme, now we've broken that, we can move our stop below that most recent low. We then break that candle's high, so we can move it up to here. And then we break that candle's high, so we can move it up yet again. And then we even break this candle's high, so we've got stopped out right there. So still a lot better of a run. Maybe that's something I can implement. It's a good start. And then obviously, as you can see over here, I still have this runner open. And that's another thing I can do is I can do a partial trailing stop. So for example, let's say I go about I want to lock in another 25. I can do a limits stop sell 25 and then just put that wherever or trail that up really tight using a 2 minute trailing stop. So when we get this run higher, start using the 2 minute trailing stop. until it gets stopped out. But that's another way to do it. I'm just going to let this demo account run, see how high it wants to go. In fact, I'll just do the complete opposite. I'll do 75. And then I'll move this to break even. So that I've at least got some sort of runner from break even just to see how far it goes on this demo account. And yeah, that'll do for this video.